Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we're going to be looking at the definition of effects of accounting changes, also shortened to accounting changes. As we do in each one of these fundamental analysis tutorial videos, I'll give you the actual definition, then we'll go on to look at some examples and see if I can't give you a little bit more insight into it. The effects of accounting changes reflect a change in a company's accounting principles, accounting estimates, or the reporting entity itself. A change in an accounting principle is a change in a method used, such as using a different depreciation method or switching from LIFO to FIFO. An example of an accounting estimate change would be the recalculation of a machine's estimated life due to wear and tear, which would alter the depreciation calculation. The reporting entity could change due to a merger or a breakup of a company. Accounting changes require full disclosure in the footnotes of the financial statements to describe the justification and financial effects of the change. Investors would be wise to read the footnotes of any accounting change reflected on a company's financial statements. Now let's go look at an example. When you're looking at an income statement, the accounting change or the effects of accounting change will be at the bottom under the non-recurring events section. Again, I'm looking at Yahoo Finance for the particular income statement, just an example. It doesn't matter which income statement I'm looking at here, but you can find this information anywhere. You could find it on Google Finance. Your discount broker will have the information as well. You can find, like I said, within the individual company you're owning or thinking about owning within the financial statements that they provide for you guys. The income statement will be in there. Again, we're looking at the bottom of this under the non-recurring events, the effects of accounting change here. In most cases, you will not find anything. It'll be just a slash, an A or 0 or something of that nature, because it's not often that you're going to find accounting changes on the actual income statement that you're looking at. On occasion, you will find something. It may be a positive or a negative number, and that item would then be added in or subtracted to the net income figure. This is an important note here. I couldn't tell you what is going to be in there simply because it could be many different things. So what any investor is going to do is they're going to go in there and they're going to read the footnotes, and it will explain what the effects of the accounting change are. And then you can analyze whether or not you think it's very accurate. Sometimes you will have situations where you may read something and think, well, I don't think that's the best way to do it. But as long as it's not blatant misuse of the accounting principles, then you're just going to be fine. And like I said in the past, most of the non-recurring events here, whether it be discontinued operations, extraordinary items, any of these items here, most investors are simply going to strike them from the actual bottom line, the net income, to try to get an idea of what's actually to be expected in a company's future. Effects of accounting changes can alter that into the future dramatically. So you do want to pay attention to that. If you see that, you want to go read and figure out what's going on, why did they make this change, and so forth and so on. In most cases, the company is just simply trying to be more accurate in their reporting of their earnings, and so that's what you're going to find on occasion. This will come into play, like I said, in the example. You'll see this show up in situations where you have a company merges with another company. That's oftentimes you'll see stuff like that. So just read about it and you'll know more that's going on with your particular company, okay? And now you know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.